Ricegrowers, the listed entity controlling the SunRice Group, is a global fast-moving consumer goods business and one of Australia's leading branded food exporters. Recently admitted to the ASX 300 Index, SunRice continues to expand its international footprint while executing an ambitious growth strategy to achieve $3 billion in turnover by 2030. Chief Financial Officer Dimitri Courtelis joins me to discuss the company's growth trajectory, international expansion, and opportunities ahead. Dimitri, welcome to the Stock Network.
Thank you, Lal. It's good to be here again.
Now, SunRice has recently been included in the ASX 300. What were the key drivers that led to this milestone, and also what does this mean for the company?
Yes, well, it's been quite a journey for us at SunRice, and whilst we listed on the National Stock Exchange back in 2007, we listed on the ASX in 2019. So it's been 18 years in a listed environment, and certainly a journey, as I said. A very slow start on the ASX with low liquidity and people not really understanding the story of SunRice and what we bring to the table from an FMCG perspective. But very pleasingly, over the last year in particular, we've been able to get a mini cap raise away with the underwriting of the dividend, which we declared in June. And we have institutional investors on the register. We made the Agri Index last year, November, and then more recently, the ASX 300. So with the increase in liquidity, the awareness of the story and the understanding of the business model of SunRice, I think more and more people are really understanding the benefits and can see the track record for itself. And following on from that, we look to just obviously keep delivering against that mandate.
Wonderful. Now, how has SunRice's listed share register evolved over the past 12 months? And also, what does this signal about the investor appetite for the business?
We had primarily retail shareholders involved in the register and either current or previous growers. But when you look at the register now, we've got almost 50 institutional investors, and that makes up just under 10% of the register at the moment. So that churn is really, moving in the right direction and getting a much healthier balance of institutional investors and retail investors. And as obviously going into the ASX 300 and as the story continues and more people are aware of what we're doing at SunRice, that we expect that to continue to grow.
Excellent. Now, you have a very ambitious 2030 growth strategy. You're targeting $3 billion turnover by 2030. What are the main levers that are driving this transformation, really, particularly within the rice and branded food products?
Yes, it's an aspirational target of 3 billion, but we're certainly looking to back ourselves to get there, particularly when you look at the previous track record. And to get there, it will take both organic and inorganic growth. So we are mindful that M&A will be a key component of that step up. But having said that, the organic growth is going to be a significant contributor to that. And when you look at the fundamentals of the business, we're not apologetic about wanting to be everyone's favorite rice food company. And with the global strategy and the operations in over 10 countries, and we service over 50 markets around the world, not many people are aware that over 60% of our revenue is actually generated outside of Australia. So when you look at the types of products, it's not just rice in a bag. We're really moving into more that microwave, that value-added product. We've got protein chips and the portfolio offering that we have in our engine brands in Riviana is a good example. And then coupled that with the complementary products of our animal nutrition products within the CopRice segment as well. So it's really around meeting the consumer's needs around the world. And as people become more and more time poor and move up the wealth curve, it's creating those meal occasions, and we essentially have a rice varietal for every single one of those, and playing into that space accordingly.
Excellent. And looking at your expansion outside of Australia, how is the company approaching expansion in the Middle East? Also, what kind of role is global sourcing playing in supporting this strategy?
Yeah, if we look at the strategy and just step back for a second, the big regions for growth are really the Middle East and the US, and that will be complemented by our global sourcing strategy that you mentioned. So when we consider the Middle East, that's a market that we've operated in for 3 or 4 decades, and we know the markets very well. It's a very different, country by country type of product offering, and we have very strategic distribution relationships in the likes of Saudi, the UAE, and even in Jordan, some of our key markets. And we are the number one medium grain player in most of those markets as well. So looking to complement what we bring to the table with medium grain, with the other types of varietals that are becoming very popular, like the basmatis and the jasmines rices of the world. And whether we're using our existing brand from a halo effect or looking to acquire additional brands in the region that may make sense. So that's the next bastion of growth when we consider the Middle East markets in particular. And then when you look at the US, it's a very, very big market, and we have a small presence in the West Coast in California, and also we operate in Hawaii as an extension of the Pacific. And again, we've been there for probably close to 20 years now. It's a market that we know, and again, looking to launch more of those convenience style products into that segment and play accordingly. And then when you look at the global sourcing strategy, we essentially have all corners of the globe covered in terms of where we can source rice from. And when you look at California in North America and Leeton in Australia, it's the same lines of latitude north and south of the equator in terms of where we can grow temperate style rice. And then over in Asia, we've got that covered with our strategic partners, in addition to our vertically integrated mill in Vietnam. So wherever rice is grown, we're able to source that accordingly. So we have that strategy down pat, and we've done that for the last probably 5 to 7 years in particular, from a real ramped up position, and we can really meet the demand of our consumers around the world. So it's not a case of where we're going to get the rice from, and then obviously also play the seasonal conditions against each other, because we will have regions going through droughts, whether it's northern hemisphere or southern hemisphere, and we have the options to backfill that demand accordingly. So we're feeling pretty comfortable with where we can source rice from, and then of course the strategy of those two markets in particular.
Brilliant. Now on to valuation and industry peers. Your valuation has risen strongly. How does the company really compare with other branded food peers such as Bega and Cobram in terms of things like positioning and also investor perception?
Oh gosh, good question. So we made the Agri Index last year, November, as I mentioned, and when you look at the peers in that subset, we feel we're more of a branded global FMCG player when you look at some of the likes of the other listed businesses there. And we've really moved away from that pure agri play that was the case probably 2 or 3 decades ago. So we're really more into that consumer goods and that global presence in terms of where we want to be playing. Yes, our share price has more than doubled in the last 12 months, but we're still close to the median peer average at the moment from a PE perspective, but there is still some runway there. But when you look at the likes of the two that you mentioned in particular, those multiples are, high 20s and into the 30s, and ours is sitting at about 15 or 16 at the moment. So we do believe that there's still some runway ahead of us, particularly when we look at the likes of those comparatives. And again, as long as we continue to deliver against the strategy, build the track record, we've had a very healthy, strong and consistent dividend that's been declared over the period. We've never declared or delivered a loss in the time that we've been incorporated as a company. So hopefully that gives comfort to the market in terms of the type of business that we are, and we no longer consider ourselves just a pure agri play. That was a very, very long time ago, and we've evolved since quite substantially.
And Dimitri, finally, can you share insights into SunRice's current M&A pipeline? Are there particular geographies or categories where you see the most strategic potential?
Well, we've pretty much looked far and wide across ANZ and picked up what we think is most relevant to complement the portfolio. So the next areas that we would look to play are primarily overseas, and in the markets that we mentioned previously, the US and the Middle East are looking the most likely. And these are, as I mentioned, these are regions that we've been operating in for a long time. So we know the markets, we know the players, we've got relationships with our distribution partners and other customers and retailers. So we know what we're stepping into, and it's probably those two that we'd look to first in terms of next steps, and potentially couple that with some plays in South America from additional sourcing opportunities as well. So those are probably the three in the deeper pipeline that we'd look to fulfill over the coming periods.
Certainly a busy period for SunRice. Thank you for the update, and look forward to hearing more as your plans develop.
Thank you, Lal. Good to chat to you.
How is SunRice driving global branded food growth and targeting $3 billion turnover by 2030?
Well, at SunRice, we're working on a number of really exciting products, and our innovative pipeline is really coming to the market and has been the case over the last 12 months. And you'll see more and more in the next 12 as we continue to deliver products in the microwave space, in the convenient meal space, in the protein space, and then, of course, complemented with our animal nutrition products in the CopRice range, and then, of course, our artisanal European-style imported products in our Riviana range under the brands of KJ & Co, Toscano, and Always Fresh. So an exciting business opportunity that we have at SunRice, looking to continue to deliver against our strategy, both in Australia, but in particular internationally, where over 60% of our revenue is generated. So watch this space.